In this second part video of the only reversal trading strategy you will ever need, you are going to be able to learn exactly how you can apply a supply and demand approach with that best reversal trading strategy. So by the end of this video, you're going to be able to walk away and start applying this strategy in your trading from today. Hey supply and demand traders, I'm Jonathan, the founder of NorthFX Trader, where in this channel I like to show you my tips and tricks to make you that better trader. Now hopefully you've just watched that first part video. If you haven't, then stop right now, go back and watch part one. I'll leave a link above now. Watch that video first because this video is not going to make any sense unless you've watched part one first. So let's get straight into this video. As I said at the end of part one, we were going to start looking at this market with a supply and demand approach on how you can use it with that best reversal trading strategy that we learned in part one. This is the area where we had the first reversal coming off this weekly low. Then we had this area we was going to look at as the manipulation in the market coming off the area of imbalance. Now, obviously, imbalance is an area where there has been price has had no selling on this occasion, and we're looking for the market to come back to fill that imbalance. Then we had the weekly levels. Remember, we plotted at the beginning of that previous video where we were going to put those levels on the chart. It was key to understanding those weekly levels, and this is exactly where we can see the market has come into off this weekly high, and we made that reversal. So let's now look at a supply and demand approach. How can you use this reversal trading strategy to your advantage looking for an entry? So we're going to start off by looking at this area here and how we can look at this as an entry. This will involve going down to lower time frames. So let's go down to this area first, and I'm going to zoom in on price. We'll be nice and close for this. Where is it? So we have this as our area. So we've dropped in, we've created this low, we've broken out of this momentum trend line. In fact, before we do that, let me just quickly go to the weekly time frame to show you something. Remove this off the chart. Now, on the beginning of the part two, we went through marking out these highs and lows, but I didn't go through why this was a good turning point. At this point, the market was trending upwards. We were making higher highs and higher lows. When the market fell down here, we had our optimal entry area coming in at this zone. So we were coming inside that zone for a trade. And on top of that, we also had this previous area of demand on the weekly time frame. So we're inside our optimal trading entry for another trade to go long, and we're inside an area of weekly demand. Now, if I also just pop up to a monthly time frame, let me just zoom in again. And this is the importance of using multiple time frames in your trading. If you haven't seen that video in this channel, I'll leave a link above now so you can watch that video. This is the monthly time frame where we see the break of structure, and we left behind this fresh area of demand on the monthly, and look where price came back into. Now our range on this pair is exactly the same as that weekly, and we pull back into our entry area, and that's why it was a good time to look for a reversal. Just in case you're wondering for that first part video why I didn't have a weekly level, I was looking for a reversal because this one is with a trend. Remember, this entry here was coming off a reversal, not an entry with a trend. It was actually a trend reversal. Just remember the two differences. Let's go back to that 4-hour time frame and just remove everything off that chart. Ooh. And sorry about that. So this is the area I want to look at. Remember what I said, we were coming off those higher time frames. On the daily, there's also an area of demand. There's the use of multiple time frame. So when we see the market dropping down, breaking this momentum line, we rally up, we pull back. we make this higher low. What do we see here? Well, in fact, when we saw this bullish candle breaking that trend line, we left this area of demand. That is your first area if you want to take a trade at a higher risk area, but a optimal area coming out of what? A higher time frame area of demand. We actually make this new high, we pull back, make a new low, removing those two lows here to the left. That is a manipulation in the market to pick up more orders. And again, it drops lower once again. So it's 3 times the market goes lower to pick up more orders. And we see the break structure back to the upside. Now, of course, if you miss anything that I'm going through too fast, just pause the video and rewind and watch it again if you're not sure. So at this point here, the optimal entry was at the 50% of this candle. That's where the entry came in. Now, if we go down to a lower time frame, you could fine-tune this entry, but using the range high to low, there's our pullback to our entry area. Look at how it comes into the entry area at the same time, the 50% of that candle. Now, the market then continues to do what? Break market structure and continues to go higher. We then have our range from this low here, which makes a new higher low, to this new high as we see the market pulling back. And this is where we start to mark out our new range area, looking for the market to come back into our area to take a buy from. As you can see, we come into that area and at the same time we break below this low here. Now if we go down to a lower time frame, you will see that this is breaking a swing low on a lower time frame where the market is making those manipulations, removing stops in the market. There are sell stops sitting there. Why this happens. Now this is something you'd like to see more on. There's going to be a new course, Forex Domination. It's going to be packed full of this type of information to help you see the way the markets move and to trade with more accuracy and to pinpoint those reversals in the market. That is something that's coming out later this year, so stay tuned if you want to find out more on that. Of course, there is also right now, as I said in part 1 of the previous video, the Advanced Supply and Demand Trading course. If you want to learn more concepts on supply and demand in more advanced concepts, that course is reduced from $497 to $197 just for my subscribers in this channel. And I'll leave a link below in the description of this video. So where we see the market now pulling back into this area, on a lower time frame, there will be an area of demand or an imbalance that will find an entry to bounce off. Now, I'm not going to go down to those lower time frames because this video is not about that. It's about understanding the best reversal trading strategy with the use of supply and demand on this single time frame. So that is how you can look for this entry at this reversal point. The next one we're going to look at was this area here, which we're going to go on to a lower time frame to see exactly what was happening at this point in the market. So we're now going to go down to the 5-minute time frame right here and how you could have caught an entry. So that same area, and we're looking at the 5-minute time frame. Now this is the area on the chart where we're now coming into that area of imbalance, what's left over. And when we see the market dropping in, this is the last bullish candle that we see. And we see market structure being broken. Now this is a confirmation entry. Now this will be helped if you watch that previous video or 3-part videos which goes through the confirmation entry. But when the market drops in, we break this previous market structure high, this bullish candle, and we left behind this area of demand where we can see the market came back into and we rallied away. And that's exactly how you've got into that trade. And if I also was to put the actual zone on, I'd be looking for that range to pull back into. We come into that entry area perfectly as well. So that is how I'd look for that reversal entry, confirmation entry coming out of that higher time frame on that 4-hour time frame area here of this area of imbalance. And remember, when went through in the first part, we are marking off this range where we came into this entry area at the same time. And that's how you will actually look at trading this market. So that is the second area I was looking for a trade. Now the final one we were looking at is this reversal point. Now this one is simply the way you look to take a reversal off a weekly level. And when we see the market coming up and making this manipulation and we broke this area of market structure, if you didn't notice it in the first video, hopefully you'll notice it in this one. When we actually broke down to downside, breaking these lows, we left behind this area of supply. And it's right there where you would look for an entry, and we can see that the market spikes into that area, and then we have a nice trade to the downside. Now at the same time as the market did that, we actually pull back from this high to low. This is our range on this swing, pull back into our entry zone, and then the market broke this market low and we created this high to low, and we pull back into that entry area once again. Now looking here, we would have had a very small area of supply when the market came into, and that was a great area. We had a manipulation of these highs as the market went in, and you could have had a very small stop on this trade, or you could have put the stop of this high for added protection, and we can see the market dropped away heavily. So that is exactly how you can apply everything together for this only reversal trading strategy you will ever need. So pay attention to what you've learned in these videos and start applying it in your trading. Now, if you are still here watching this video, in fact, let's shake it up in the comments once again and leave me one comment as well, so I know you've watched this video to this point. And that comment is best ever. If you leave that in the comments, I'll know you watched it to the end, and I know you are a subscriber to keep an eye out on. Now, if you enjoyed this video today, in fact, if you've enjoyed both videos, don't forget to give me that thumbs up in this video and that previous video, so I know you're enjoying this content and I can continue to do more videos like these in the future. And if you hang around, there will be another video popping up in a moment for you to go through some more education with your supply and demand trading.